This is Debit and Credit Theory Part 2. Once you've read the Part 1 handout, this will make more sense. I have some very simple transactions listed here, and I have the business's T account set up. The balances in the T accounts I would have gotten from the previous balance sheet. And remember, assets are on the left, so their balance goes on the left. Liabilities and owner's equity are on the right, so their balances go on the right. I've added up my assets equal 15,100 and my liabilities equal 15,100. So I'm all set to begin analyzing transactions for this month. So for the first one, the business paid $200 cash for supplies. So you're going to ask yourself what accounts are affected, what side of the accounting equation are they on, are they increasing or decreasing, and therefore are they debit or credit. So if the business paid $200 cash for supplies, one account I know is affected is bank. I know it's decreasing, so therefore I know it is a credit of $200. The other account that's affected is supplies. It's an asset, it's increasing, so I know I'm going to record that on the debit side. I take a look and I got a credit of 200 and a debit of 200, so my debits equal my credits. In the second transaction, the business bought a car for $45,000 on account. So what's one account that's affected? Well, automobile. What type of account is it? It's an asset. Is it increasing or decreasing? It's increasing. Assets increase on the debit side, so therefore I will record it on the debit side of automobile. What's the other account that's affected? Well, I bought it on account, so I didn't pay for it. So I probably took out a bank loan for it. So what type of account is bank loan? It's a liability. And is it increasing or decreasing? It's increasing. Liabilities are on the right, therefore they increase on the right or credit side. So I'm crediting bank loan 45,000. So I've got a debit of 45,000, a credit of 45,000. My debits equal my credit. The owner put 5,000 into the business. What's one account that's affected? Bank. When the owner puts money in, it goes into our bank account. Bank is an asset. It's increasing, so it gets recorded on the debit side because assets increase on the left or debit side. The other account that's affected is capital. Capital increases when the owner puts money in. So what type of account is capital? It's owner's equity. It's on the right side of the accounting equation. Therefore, it increases on the right side or credit side. So I'm crediting capital 5,000. I have a debit of 5,000 on this side. I have a credit, so my debits equal my credit. The business performed a service for 2,000 and the customer will pay later. What's one account that's affected? Well, we've performed a service and that's what we're in the business to do. So when we do that, our equity goes up in the business. So what's one account that's affected? It's capital. What type of account? It's owner's equity. It's increasing and owner's equity is on the right side of the accounting equation. Therefore, it increases on the right or credit side. So I record that on the credit side of capital. The customer will pay at a later date. So they owe us the money. People who owe us money are called accounts receivable. Accounts receivable is an asset. It's increasing because they owe us more money. So we record it on the debit side. Once again, my debits equal my credits. The next transaction, we pay the utility bills for the month. What's one account that's affected? Well, owner's equity goes down because we're paying for an expense of doing business. What account gets affected? Capital. It's decreasing, so owner's equity is on the right side of the accounting equation, so it decreases on the side opposite, the left or debit side. So we record 500 on the left side of capital and we had to pay that money, so it comes out of our bank account. Bank is an asset that's decreasing, so assets increase are on the left side, so they decrease on the side opposite, the credit side. Once again, we have a credit of 500 and a debit of 500, so that's equal. The next one, the owner withdrew $400 for personal use. Well, the one account affected is capital. It's an owner's equity account, and it's decreasing. When the owner takes money out, the capital decreases. So we record that on the debit side of capital, $400, and it's coming out of our bank account again. So since it's an asset and it's decreasing, it gets recorded on the credit side. And the last transaction, we bought $450 worth of supplies on account. Well, what's one account affected? Supplies. It's an asset. It's increasing. So assets increase on the left or debit side. So I'm recording that 450 on the debit side of supplies. What's the other account that's affected? Well, we paid for it, $450 on account. That means we owe money for it. So when we owe money, it's accounts payable. It's a liability. It's increasing because we owe more for it. So liabilities increase on the right or credit side. So it gets recorded there. So we have a debit and a credit. I will be going over how to balance these accounts and create a new balance sheet tomorrow.